there was a consensus up to the early 70s on what the role of government was.
And so when in the 1970s this starts to fall apart, you pointed to the oil crisis as being the motivating event that gives people the opportunity to jump ship from this paradigm. And so if this paradigm has been working since the onset of World War II, why in the 1970s are people eager to jump ship from it? Is it just because the left has fallen apart and is now, you know, talking about identity politics and arguing about the finer points of like who's more oppressed? Or is it because Keynesian economics has stopped working? Or is it some other third thing that's mysterious and not on the table yet? Like why does Friedman become so popular if
Well,
not for the
inflation.
CIA?
Inflation's the reason, and let me explain that. So up until the 1970s, after the Second World War, first of all, the Keynesians had a view of inflation that was demand side. So the Keynesian framework could understand inflation if it came from excessive spending. So if spending outstripped the capacity of the supply side to supply goods and services in response, then you would get price rationing through inflation of that spending. So Keynes talked about the inflation gap. So if there was excessive spending, you would get inflation. Keynesians understood that. And of course, the whole conduct of fiscal policy in the post-war period was to manage spending so that it didn't push through that ceiling, but was sufficient to keep everybody employed. So that was a sort of art form. Policymakers were always, balancing the odds, and the government departments, like the employment departments around the world, including in America, had very sophisticated what they call manpower planning divisions. And that was just the manpower was just because of the domination of males in the workforce at that era. It was just a cultural thing. But the manpower plannings were very sophisticated, forward-thinking frameworks to say, well, what industries are going to be growing and declining, and what apprentices and trained labour will we need to have in place so that we don't get shortages and gluts. And that was all to do with managing this inflation ceiling. The problem with the oil crisis, now Milton Friedman up until then had been saying, too much spending is going to always be inflationary. And the problem with the oil crisis was that it wasn't a demand shock, it was a supply shock. So suddenly the raw material price of oil that countries who were dependent on imported oil were had to suddenly endure. That created a ruction, because if your imported oil price is rising and your costs of production are rising, well, then in terms of the real income that the economy is producing is now lower, because some of it has to go to the rest of the world, the Saudis, in other words, to pay for the oil price rise. And so the question then became for countries, well, who's going to share in that real income loss domestically? Is it going to be labour or is it going to be capital? And so there were, and at that time, remember that trade unions were still quite powerful. They hadn't been gutted yet. And so they had the ability to resist cuts to their real income by industrial action to push up wages. And of course, on the side of capital, capitalism had become quite concentrated. In other words, monopoly power was quite entrenched. And so that meant that those firms had price setting power. They weren't free market firms. And so what happened was that in trying to mediate who was going to, just hang on. Sorry, I'm in a meeting. See ya. Sorry about that. So in terms of mediating who was going to take those real income losses, a lot of the struggle over that became quite dysfunctional, and the governments responded by introducing austerity because, in other words, they worked out that by creating unemployment, you could reduce the intent of the trade unions to keep pushing up nominal wage demands, and you killed off sales for firms, and that reduced their incentive to keep passing on pushing up prices. And that's why inflation accelerated at that time. But it was largely a supply shock. Now, the Keynesian economists couldn't deal with that. And the monetarists, of course, they were very dishonest because they said, oh, we told you so. Here's all this inflation. And the reason there's this inflation is because governments have been running these deficits for too long. Now, that wasn't the reason there was inflation. The inflation was because of the cartel power of OPEC engaging in a political action against the US for supporting Israel in the oppression of Arabs and stealing of Arab territory. But the monetarists were able to conflate the inflation of what they were saying, that our deficits are bad, because the monetarists wanted free markets. They wanted to get rid of regulation, big government, and push the power back into the corporations. And they hated social democracy. And so the monetarists were able at that period to take the inflationary event and then sell that to the ignorant public as being a outcome of all these deficits and social democracy, and see, we told you so. Now, the Keynesians had no understanding of supply side shocks. So because there hadn't really been very many supply side shocks in that whole period of stability after the Second World War. And the only people that really understood it properly were the Marxists, by the way, because there was a whole series of theoretical articles in the Monthly Review, which was an American journal that left-wingers wrote in, describing what was building a theory called the conflict theory of inflation. And the conflict theory of inflation was really saying inflation arises out of class struggle. So this was the struggle over who was going to take the real income losses of the imported oil price rises. The class struggle was facilitated by strong unions and monopoly firms. Inflation was allowed to accelerate because governments were initially scared to death of creating unemployment. And so you got this conflict theory of inflation, that inflation's really nothing to do with monetarist ideas, but to do with the embedded tensions in the class struggle. But that was a minority view. But that's why Milton Friedman was so successful. He exploited an inflation crisis and then was able to construct that crisis in terms of his own thinking, which was quite illegitimate. But the rest of us, the public, didn't have a clue.